Right, hello then guys, and welcome back to another video, another update on my stocks and shares ISA portfolio. It's been a little while. If you watched my last video, you'll know that I was away in Ibiza. So it was a bit of a change of pace, coming back to talk about markets and talking to my camera in my bedroom. But here we are. Sorry if the audio is a bit messed up on this video. I got a new phone and my old mic doesn't connect to this one, so I'm getting a new one for the next video, but you'll just have to bear with for this one. But yeah, a lot's happened in markets, a bit of divergence in the funds. We can talk a bit about the dollar and what's going on with Trump, and then we'll come on to, what's happened in my portfolio. So with that covered off, we'll come on to the Excel dashboard.
Just a reminder, this is not financial advice. This video is for education and entertainment purposes only.
Right, contributions, 0. As you might expect, Ibiza is quite an expensive place. So not only did all of my paycheck go on the holiday, but also all of my bonus went. So I got my bonus in August, and that's all gone, and so is my paycheck. So £0 to contribute in August. I do get paid on Monday, which is quite nice. I am questioning whether or not I'll be able to contribute. I might be able to put some in and then have to take it out, but we'll see what happens. I'm currently on, I think I've got £40 in my current account, which is not ideal. But yeah, that's what happens when you go to Ibiza, break your phone, and spend a load of money. So that's that. Coming up just towards the top, you can see obviously no buys and sells. A recap quickly of the portfolio for anyone who's new. You've got 6 funds. 3 are quite sort of aggressive, quite high beta. So if the market goes up, they'll go up more. If it goes down, they'll go down more. And they are the BlackRock Fund, the American Smaller Companies Fund, and then the Tech Fund. And then you've got what I'd sort of describe as more defensive funds in insurance, healthcare and pharma, and special situations, which is a UK-based fund. Broadly doing what I'd like them to do. I mean, we'll come onto the chart shortly, but I would like health and pharma. I mean, it's picked up a bit more recently, but that's had idiosyncratic headwinds. BlackRock's been a bit hit and miss, let's put it that way. I'm thinking about changing that. I'm also thinking about moving from Hargreaves to AJ Bell because it's just cheaper. And as this portfolio grows, I would like to introduce like sort of stocks and stuff like that. So that will make my life easier if we were on AJ Bell. So I might do that and talk you through that process. But yeah, I'll talk more about the funds when we come onto the charts. If you look at portfolio value, this chart's the one that's starting to look a lot nicer. We're up to over £13,000 now. Still on a bit of a loss, and that's due to timing, which again I'll cover off when we come onto the charts. You can see there was a big drop in markets due to Trump tariffs and uncertainty and all that sort of stuff. But the good news is the gains are continuing to eke themselves out, and we have almost got a black gain bar on top of the contributions bar. I have said for a couple of months that I'm a bit scared or cautious about where markets are. If you actually saw my last time I added to the portfolio was in July, I didn't put it into the more aggressive stuff. I put it into health and pharma and insurance. And with the market steaming away, they've sort of underperformed. But in a sense, that's more concerning than if they'd outperformed because, I mean, we'll come on to the chart shortly, but I think markets are in a bit of a dangerous spot at the moment with valuations where they are. You have got rate cuts on the horizon, which is obviously a big tailwind, but I don't know. I'm a bit cautious. I think if I do contribute, again, it will be into those safer stocks. I'd probably go more into global insurance, even though it's already 32.5% of the portfolio. I have utmost conviction in that fund, so yeah, we'll see what happens. But let's go on to the charts and talk through things in a bit more detail. Right, so before we go on to TrustNet, I just want to talk about TradingView quickly. This is sort of like a dashboard that you can use to track any investment, or any specific stock. You can't do funds, that's what TrustNet's for. But this was the initial sort of tariff crash. This is the S&P 500 so the US index. Similar story across the board. You've got the UK index here. Actually, just quickly on this, I've got some stocks here that are in a different portfolio that I'm going to make some videos on when my new mic comes. So stay tuned for that. I've got insurance down here, some things on the watch list. But anyway, you can see that the S&P is just completely defying gravity. I think the forward PE ratio, which is like basically the higher the worse, really. That's not, there are nuances to it, but the higher the worse it is. So like 23 times, which is not normally positive for future looking returns. You want to buy low, sell high, effectively. So with the market where it is, I'm a bit concerned. And we'll come on again to talk about this in a second. But the dollar, I was hoping for a rebound. If you saw positioning at the start of summer, pretty much everyone, every institution, every big money player was positioned for more downside in the dollar. So I thought we'd get a bit of a squeeze, a bit of a short squeeze rally type thing, catch people off guard. We did get a small one, and I was getting a bit excited. I was like, oh, the US dollar holdings are going to start picking themselves up in GBP value. Because if you're holding a US based investment and the US dollar goes down, then your value in your own currency has gone down. Is that right? Yeah, that is right. So you're holding something in dollars, but the dollars are worth less. So you've got less value effectively. And my portfolio is quite skewed to the US, as most people's will be. So I was hoping for a dollar rally. Didn't happen. I'm still holding out for that a little bit, but I think if it gets to the end of the year and it hasn't quite changed, I would look to move into hedged share classes, which also ties into my decision to move to AJ Bell, because you don't have many hedged share classes on AJ Bell. But we'll cross that bridge when it comes. Right, so just coming on to TrustNet to finish off. As I said, you can chart funds on here. What I've got here is my portfolio, hypothetically, if it existed for 3 years, which obviously it hasn't. This series started in sort of Feb, versus the global sector. So all active funds, all passive funds in global equities, which my portfolio is global equities. Hypothetically, I'd have had a lovely outperforming line. I unfortunately started the series here, where Trump did his Liberation Day tariffs, and we had the DeepSeek scare, which was a Chinese AI story, which put fear into US tech stocks, which hurt the market. Anyway, US dollar crashing. And yeah, pretty much since then, we've had a V-shaped recovery in the global sector, where my portfolio has pretty much lagged behind. So if we put it on let's put it on, in 6 months, sort of tells a story. 1 year's better. So the way my portfolio is positioned, really, is sort of designed to be a steady Eddie type thing. So if you think the global equity sector will likely go up more and go down more, and I'm hoping that my portfolio will sort of carve through the middle. When it won't work is when what I perceive to be times of extreme greed, extreme market sentiment. That is when things will go badly, to the upside primarily. I mean, this downside coverage, I'm quite disappointed by. I thought I'd outperform on the downside. That was a couple of things. So the US dollar weakness and the Liberation Day was specifically bad for small caps, which I have a healthy weighting to, far more than this global sector. And then the healthcare story has had some idiosyncratic stuff, as I mentioned. So RFK clamping down, the United Health CEO getting assassinated. Oh no, it's not CEO. One of their execs got assassinated, and then they had big earnings warnings off the back of that. And that's a huge weighting in the global healthcare sector as a whole. So those two things have really held my portfolio back. But that said, this recent rally and the rally just beforehand, typically when I'll underperform is when there's a sort of a rush for trash, in a sense. So if you think about the small cap index again, if you look at the actual the passive index, I think something like 60% of those companies are unprofitable. So if that's rallying a lot, you've got people just rushing to get high risk equity exposure. So realistically, if I'm underperforming that, that's almost a good thing. You know, I'd rather have my money in profitable companies. So although it sounds a lot like Cope, this recent rally where I've started to fall a lot behind, to me is a big warning flag for the equity market. And there's there's a number of really reputable fund houses, Ruffer, GQG Partners, that, I mean, let me just pull up the GQG chart as I speak quickly. GQG Global Equity. These guys have absolutely smashed it. If you look at institutional money, they've got 150 billion under management. A lot of sort of safe investors, safe institutions will park their global equities in these guys alongside a passive to sort of give them that edge. And they went defensive halfway through this crash and have evidently been defensive since. And it's almost at a point now where you've got the silly sort of Wall Street bets money chasing the market, throwing all the money that they can at this 23 times multiple S&P 500. And in my head, I like to align myself with these sorts of people. So yes, it hurts in the short term underperforming, but I'd be cautious about markets at the moment, and we'll see what happens. So that has been a very all over the place first video back, somewhat to be expected, but hopefully you enjoyed and took one or two things from it anyway. If you've got any questions, let me know in the comments, and stay tuned